Hello, everybody. Good to see everybody again. See some friendly faces and names on the screen. There's a lot of stuff happening in the world. I think, what I wanted to do is reach out to the audience and let everybody know what we're thinking about the current real estate investing environment, especially with respect to the tariffs. Now, I've been speaking at a lot of events about this subject. What I'm going to do is lay out the framework of my thought process, and then we'll go into a short presentation with about 10 or so slides, and then we'll finalize. We'll end with some Q&A. The tariffs have caused a lot of uncertainty, myself included. I think we're all kind of waiting to see what will happen. But so what I wanted to do is, everybody, there's a lot of uneasiness, but what I wanted to accomplish is talk about U.S. real estate investment as an asset class. Now, just like investing in stocks or other asset classes, we are conditioned to have certain biases, but it's important to remove the emotions, look at the facts, and make our decisions according to the facts. And what I want to accomplish today is lay out the foundation of why I think U.S. real estate investing is actually one of the best, if not the best, assets to invest in, because of certain fundamentals that are undisputable. So on the next, when I go into the presentation, I'm gonna show you some slides that prove the fact that this could be not a better time to start investing in real estate, because the supply-demand landscape is so dislocated that people who can afford to make these investments are going to be better off over the long term. Now, what makes the US better than any other real estate investment market is that it's the only major country and economy that gives you double-digit rental yields plus capital appreciation potential. Now, everybody's thinking, well, these tariffs, is it bad for the economy and all these type of things? And quite frankly, I guess we're seeing some of that. There's a lot of uneasiness. But I'm just going to tell you one thing. In 2000, and I'm going to show you these charts, but in 2022, literally the worst thing that could have happened to the real estate market was that interest rates went from 0.25, these are Fed funds rates, went from 0.25 to 4 in a year. And in that year, home prices went up 10%. So my point being is that we've seen the worst. And over the next few slides, I'm going to present the case that structurally, U.S. home prices are going to be forced up, and so are rental yields. And I'll go into the reasons why. And, the tariff situations, we can talk. I've done quite a bit of research on this. I talk about, tariffs and how it impact economies, in private events. However, this presentation is about how it affects the U.S. real estate market. So with that said, I'm going to go into the slides. Hopefully this won't be too boring for everybody. So here we go. The first slide. Okay. So this is going to be a contentious, thing I'm going to say, but, the old American dream was you work hard, and this dates back to, the baby boomers, right? After the war, you got a job. It was, you were the first to go to big cities to get a job. And, your dream of having a family and owning a home, that was the definition of the American dream. Now, the American dream, that specific definition, I'm going to argue is dead. The opportunity, and I think it's really important that when you're investing, you got to take off your hat for primary investment and look at this as just a pure investment. And so, the folks in America that are looking to, work hard and own a home, it's really difficult. And I'm going to show you some statistics to prove that. But the new American dream, I will argue, is that instead of owning a home, you may rent. And that's good for us as property investors because, part of, we've all heard of the Maslow's, 5 basic needs. And one of them is you need a roof over your head, you need food and all that kind of stuff. But so we're slowly moving into a world where more Americans are renting, and that's not slowing down. In fact, 12% of Americans are currently renting, and that's increasing significantly year on year. But the new American dream is that we now have more avenues to make money, right? So while we may not be able to own a home, there's different avenues to make money, whether you're trading crypto or trading stocks, or you're advertising on TikTok, or you have your own YouTube channel, or you're selling things on Amazon. Whatever it is, those types of ways to make money didn't exist when I was growing up. When I was growing up, you worked really hard. You worked at a company for 20, 30 years. You have a pension. Hopefully you were able to buy a home and you make some good investments, and then you retire. Then you move to Florida and you play golf. That is being redefined now. So the next few slides are going to show this. All right, so this is factual, right? So you can Google this on your own, you can use ChatGPT, but the bottom line is that there is a massive home shortage in America. Anywhere you read, it's between 5 to 7 million home shortage. Now, of course, you'll read some doomsday, things on media like Florida home prices are collapsing or Austin, but these are, you have to do your research. Like during COVID, people in California wanted to move to a state and to a city that looked more like San Francisco, and that was Austin, Texas, one of the most beautiful cities in America. But you saw a lot of buildup during COVID, and now there's a little bit of oversupply. There's some pockets of Florida are like that as well. But when you're investing, you should do some research, and I'll go into some tricks on how I look at things. But you see here, we're headed toward a landlord-friendly era. This is the Wall Street Journal just 2 months ago. So you're going to see more of these anecdotes in the news, and I want you to pay attention to this, because this is the mass market slowly coming on to what I'm about to present. There's a lack of housing, and guess what? That is actually not going to improve anytime soon, because if I'm a home builder and I have to buy an electric drill and saws and screwdrivers, well, they're all made in China and they're twice as expensive. Most of the lumber that is used towards home building comes from Canada. 70% of lumber for home building comes from Canada. These are all things that are going to create no rush to go build homes, making this supply issue even worse for people looking to buy primary homes. It's really good for us because we want to be in a market where supply isn't increasing. So as a buyer of homes, you buy now because of lack of supply and increased demand, prices go up, which I will show you factually in the next few slides. Now here, this is literally probably the most important slide. So if you can see my cursor here, this is 2022. The blue line, Fed funds went from 25 basis points to 4%. Now, so that's a 400% increase in Fed funds rate, which coincided with mortgage rates. Now, if you didn't look at this chart and I told you, what do you think home prices would have done? You would have said, oh my God, home prices would have collapsed. But in fact, if you look at the red line, they increased. Why is that? Because of the lack of supply. Now you look at what rental yields have done. They came down a little bit and they're steadily going up, right? And you can think, you see the difference between the green line and the blue line? Well, that's your profit. One's a mortgage, I mean, all things being equal, kind of a mortgage rate. Actually, the rental yields, that's 2024, they're higher now. But you think over the long term, mortgage rates are going down. Rental yields, you see the trend, it's going up because of lack of supply. And now here's this little blip. This little blip was 2022 to 23 when you had like a mini 3-month banking crisis with FTX, Silicon Valley Bank, and Credit Suisse, all things disrupting the market. Home prices fell marginally, 8% down, and now it's holding steady and increasing. So my point being, the point I'm trying to make is that we've seen almost the worst thing that can happen to home prices, which is mortgage rates increasing dramatically, and yet home prices are increasing. Now here's something that, when I say the American dream of owning a primary residence is dead, this is what I mean. The most commonly accepted ratio is that your salary should be 1/3 of the home that you're trying to buy. Now, the average home price, median home price in the US is $420,000, say $400,000, and the average salary is $60,000. So it's either home prices drop 50% or salaries double, which ain't happening, right? So this situation is so out of whack, which means the US is slowly moving into a world where they're forced to rent, and they're going to get used to that concept. In fact, most of Europe rents. So it's a tough situation if you really want to own a home to live in as a primary residence and build your family in the US. But as a person like you, me, and our audience here watching, you want to be this is a perfect situation to be a property investor. Now look at this. So under 3 is considered affordable in terms of your home price to salary. 3 to 4 is moderately affordable, and everything else is unaffordable. Now look at the next slides. This is state by state, which means the only state in America which is considered affordable is West Virginia. The average home price is $155,000, and that median income is $52,000. You look at all the orange ones, which is some like moderately affordable: Kentucky, Louisiana, Mississippi, Arkansas, Ohio, Oklahoma. Now, so there's a balance, right? So if, and I'll go into what makes the US really unique in terms of how it gentrifies. So these are some of the things that you want to look at, right? I mean, do you want to buy a home for investment purposes in California, which is totally unaffordable, or you want to look at some of these areas? Because if I'm a family in California and I say, honey, it's too expensive to live in California, let's move to another state and let's start fresh, right? I'll get into some of this in further slides. These are some of the things you look at. These are some of the ratios that you look at as a family to determine, where am I moving to? Obviously, you want to go to where there's good school districts, there's low crime, there's abundant employment, but you also want to look at this if you want to own a home, these type of ratios. Now, I'm hosting this webinar from Asia, but the US, regardless of what's happening in the media over the past few years, is that it's still a place where people want to send their kids to school. If you're outside the US, so all of our clients are living outside the US, education is the primary reason why people buy properties in the US for investment purposes. And that's not to say, they want their kids to stay there or whatnot. It's usually they would have gone to school in the US. Maybe they have a family member that lives in the US. They've been to the US and wouldn't mind their child going to university there. Whatever it is, this attraction that education in the US provides is a real magnet. And as you can see, last year, overseas international students were over 1 million, and that's a 7% year-on-year increase. And that's still, increasing right now. Next slide. So this is super interesting. The US gentrifies better than any other country, period. If you're working in a services industry in Sydney and it's too expensive, and Sydney is really expensive, it's one of the most unaffordable cities in the world, you say, well, let's move to Melbourne because home prices are less and you get a similar job, similar income, but then prices go up and you're like, well, it's getting expensive in Melbourne. You start to run out of cities to move to. You can go to Perth, Brisbane, and then where do you go, right? If you're in London and you're in the services industry, are you moving to Manchester or Tottenham or other cities? And it gets really difficult. But in the US, in fact, one of the most famous brands in the US is a brand called U-Haul. Everybody knows of this brand. And this was a brand that was started after the war where people could move around to different states. So if you can't afford to live in California, you rent a U-Haul, you put all your stuff in it, and you drive to Texas and you start fresh. So what my point being is that gentrification and state-to-state mobility is in the DNA of Americans. So while most of our audience are not Americans, we want to make our investments in states that attract this gentrification. So it's usually cost of living, employment opportunities, better schools for my kids, and actually, and availability of financing. I want to be able to move from California to Texas, but I still want to be able to get a mortgage. Well, that, financing is abundant, in the US. And, for us, we're a US bank. So, and all we focus on is people like you in the audience who want to take advantage of this real estate opportunity. And with leverage, you can enhance your returns, which I'll get into towards the end of this presentation. But the way the US is formed, many of the cities are on a grid base for this reason, that it allows cities like Dallas, Fort Worth, and LA to expand outwards, because after when US first started, they knew that gentrification was important, and they created, most cities, large cities, on a grid formation that allowed for urban formation. But more importantly, it has a culture of migration. I'll give you an example. So these are the top 10 states that saw the highest population increases. Texas, North Carolina, the Carolinas, Florida, Tennessee, Georgia. So these 6 states are what we call the Southeast Corridor. Did you know that in the Southeast Corridor are building 9 EV factories, each hiring between 2 to 9,000 people? And so, if I'm moving from New York to Texas or California because it's too expensive to Texas or to Florida, I'm thinking, where can I get a job? Google that search for that on Google, and you see these states, and then families will do their own research. But what do these states have in common? Well, just looking at it, I know that Texas has no state tax, Florida has no state tax, but to me, it looks like it's cost of living. Right. So next slide. So if I'm in these states and I want to move, I look at these things. What's income tax? Well, look at Wyoming, Alaska. Well, maybe we're not going to move to Alaska, but Florida, Tennessee, Nevada, Texas. What I'm trying to say is, as an investor, I want to do homework because I want to front run or preempt what these people who are immigrating to the states, why are they moving there? Well, they're obviously moving there because cost of living, tax is a big component of this. So as you can see, Texas comes up on a lot of screens because there's no income tax, state tax, sorry. So another thing, you look at the CHIPS Act. So CHIPS Act was Biden's, one of the former president's initiative to bring back manufacturing. The CHIPS Act is earmarked to hire 500,000 people over the next 10 years, direct and indirect. And our current president, Trump's Stargate, is set to hire 100,000. So total 600,000 jobs. And here's a small snapshot. Arizona, TSMC. So this was the CHIPS Act, billions of dollars of funding, 30,000 hires. As you can see, hundreds of thousands of people looking to be hired. So it's not just the people in the plants building the semiconductors. There's going to be coffee shops and dry cleaners and restaurants, and these are the indirect jobs that are hiring. And we have some clients that do this type of homework, right? They look to buy single family homes within 30-minute drives from Intel factories. And man, you should see some of the gentrification of these cities. I mean, these cities look like slums, and now 2-3 years later, you wouldn't be able to tell the difference between Austin and some of these areas. Next slide. Now, as a property investor, you want to do a little bit of homework and see, where are people moving to, but are those states landlord-friendly states? So these are the top 10 landlord-friendly states. Typically, you want no rent control, right? Which means that as a landlord, you have the ability to raise rent however you want, and fast eviction procedures. If your tenant doesn't pay, I want to be able to kick him out, find a new tenant, and favorable state court systems that allow you to do this. So these are the 10 top friendly states. Ohio comes up as one of the top. It has low cost of living, home prices are low, it's gentrifies, and it's a big, urban type of city. Arizona, lots of technology is moving there, partly because it's hot and you can generate electricity for your semiconductor plants and stuff like that. I personally like Georgia. Atlanta's a fantastic city to be an investor in. USA Football is based there. It's known as the Hollywood of Hollywood 2.0. A lot of stuff going, in Atlanta's favor. It's also the busiest airport in the world is Atlanta. So these are all some of the things, some of the homework you need to do to identify where to be buying. All right, now we'll get into, we are a lender, right? So we lend on our balance sheet in our name for our folks outside the US looking to buy an investment property. And this is our core product. And this is the most popular product that we offer also, which is, if the rent that is appraised from the property that you want to buy, say you want to buy a $250,000 home, we run the appraisal, and then we also appraise that it should rent for $2,400, and so it should rent for say $3,000, and if the mortgage and related mortgage expenses such as insurance and HOA and tax comes out to $2,400 or less than $3,000, you qualify. We don't need to see any other, of your personal financials. You qualify on the cash flow that the rental is going to give you. Now, I've only highlighted one loan program. We have loan programs for expats It's just like you walked into your, neighborhood bank that you grew up in. Our programs also for expats don't require W-2s. We have programs that you could use your income to qualify. It's less popular because it's just a little more homework because you're using your income. You're proving that your income that you earn can qualify to cover the mortgage payments. Now that just requires us to do a deep dive into your foreign earned income. And we're one of the few places that you can actually use your Singapore income. You can show me your Malaysia income. You can show me your Japanese income. And we use that to qualify for the loan. The loan programs are very robust. We have on our balance sheet, we have a few loan programs that can go as low as $100,000 in loan amount, all the way up to 2 to 3 million, and even higher for some of our. We also have a high net worth loan program for folks that want to qualify using their investment portfolio. So for example, if you have a Fidelity portfolio and it's several $1,000,000, we can take that, use a formula and use that to qualify for the mortgage. And a lot of people that are affluent or high net worth, they don't want to show so much stuff because they're busy making money. So that is something that we can dig into. But I wanted to show you the most popular loan program that we offer. Last but not least, I wanted to talk about something that's become increasingly popular, which is tapping your home equity for cash. And so we do this as a broker for US real estate, London real estate, Australia real estate, and our favorite Singapore real estate. In Singapore alone, we funded over 400 million in Singapore property alone. And basically what this is the next slide is, you have an opportunity, whether you have a friend that wants to sell you the business, but he needs the money really quickly, or you want to bring the income back to your home country because your bank is not lending you to buy your raw materials. Maybe you want to buy new properties. We actually just had a client today have 3 single family homes on the West Coast, no debt, and he wants to buy a home in Singapore, but he lives in the US. And so what he did is we did a cash out refi. Pulled out 65% of the equity, and he's using that cash to buy property in Singapore, which of course we're helping him with as well. Because right now there's a lot of, we had a client that pulled out cash from their US property to buy gold, right? So this is a liquidity solution for those that need cash for a short period of time when there's an opportunity. So listen, that's it from me. Here's our contact details. But what I wanted to say, and I hope this is the message that you glean from this presentation, I purposely wanted to keep it short and sweet so I can engage the audience on questions that they have. 1, all of this will pass. 2, we have to look at a real estate investment like any other investment. It's not a primary residence. You're not living in it. You don't need to have a view or facing the sun when you wake up or facing east because it's good feng shui. If you're Chinese, you want to buy a home that's rentable, where there's high demand of renters, and those renters are seeing a higher wage, and those are the tenants you want. And so you have to do your research on where should I be buying. So I have a small snapshot of some of the things we look at. I've actually done a very long presentation on, and I go really deep into, some of the tricks and ratios and screens to find these properties. And I'm happy to share that slide with you. Just message me and message your contact details in the chat, and we'll email that to you. So I hope that was useful. Don't panic. It's very, the uncertainty, everybody's feeling it. But if you have disposable income outside the US and you want to make an investment decision, US single family homes and property in the US is maybe the best thing you could do. The entry price is significantly lower than probably where you're living. I was just presenting, I noticed one of our good friends on this chat, I was presenting to a group of investors in Malaysia, and we were talking about Chicago property, and super nice Chicago property, grass front lawn, fence, 2 stories, bricks, looks like it's out of, a movie, is less than a condo downtown Malaysia, where you get no rental yield. So I think, if you can get over the mental hurdle, like, wow, how do I invest over there? And, how do I look for properties? This is really exciting. we can help you with that. We can introduce you to realtors practically in any city you want. We can help you with the screening process. We have tons of research and data. And this is one thing I want to say. There is so much data available in the US. Like if I wanted to buy a place in Singapore, I still struggle on like which street and stuff like that. In the US, there is data overflow. Anything you need, there is, whether that's Zillow, Adam, Reddit, Realtor.com, NAR reports, you name it, it's there. And we can help you with some of this as well. So with that said, I'm gonna wrap it up, and I'm going to open the webinar to some Q&A. So I'm gonna start reading it now. All right. Oops. Okay, I'm having difficulty finding where the Q&A is. Oh, there it is.
Donald, stop your screen share.
All right. Okay. We're in business. Is now a good time to invest in U.S. real estate? Well, if there was one thing I wanted this webinar to say is that in a perverse way, high rates is actually good. And let me explain why. It sounds irrational, but rates at 8% for 30 years is high. It's high all over the world. But if you can earn 12% rental yield, you're in the money 4%. And what do I think is going to happen in 3 years? Well, 8% go to 5, and the 12% rental yield is going to go to 15. So your margin expansion, and when interest rates go to 5, you call me up and you say, I want to refinance my loan. And when you do that in 3 years, your property would have been 20% higher. So when you pull out cash, you've actually recouped some of your initial down payment. And that's the US game. So, high interest rates, and, in my, I think slide 2, the median income, the median home price to median income is almost 7 times, which means that coupled with mortgage rates where they are now, the average buyer in the US can't buy, but he's got to live somewhere, so he has to rent. And guess what? We're tenants. We're landlords. You can Google institutional buying of single family homes in the US. I'm not the only one that knows this. Blackstone knows this. These guys are smart. They have significantly more data than what I presented to you today, and they're doing it. And I think, just like Warren Buffett, these guys are smart. You should follow what they're doing. Are there any signs that gentrification is slowing down in major cities? There's always going to be gentrification. Like I said, it has a culture of gentrification. Now, if I'm in tech, well, there's only one place I can be. That's Silicon Valley. So are people in Silicon Valley moving to Dallas? Probably not, right? But are those our clients, right? Are the sweet spot that we see is a home price between, say, $250,000 to $500,000. You have good tenants, a dual family income. So say a family income of $120,000 to $150,000 could support a $250,000 to $500,000 home in a good school district, and the quality of tenants is very high. So the US will always gentrify. And maybe in 10 years, it won't be Texas. Maybe it'll be Portland, or maybe it'll be Ohio. Well, I think Ohio is already happening, but maybe it'll be another state. But right now, it's happening, it's real, it's here, and it ain't stopping anytime soon. Should we prioritize states with no income tax when investing? Listen, it's one of the things I look at, right? So, you just have to put your mindset in. It's like buying stocks. Like when interest rates go down, what are you buying? Well, you're buying risky assets. Risk assets, when interest rates, does it affect the banking sector? Then you buy some bank stocks. You have to put your mind into what your tenant is thinking. So they're probably thinking, where should I move to rent? Well, I want to move to a place where I don't have to pay, there's low taxes or no taxes. Well, I had a slide on what those 10 states are. I want to move to a state where there's good school districts. We have a report, and message me and I can send you this report where we identify the top public schools and private schools in California, Texas, Florida, and New York. Why did I do that? Well, it's because if that's the mindset of somebody who's looking to move to another state, where are the best schools for my kids to go, right? That they could live the American dream of graduating, going to a good college. And then I look at home prices in those top schools, and guess what? Obviously, those home prices are going up because people are moving into those areas. How does qualifying based on projected income work? Well, this is something that we revolutionized for when we brought to the market for foreign nationals living overseas is that actually you can get a mortgage in the US. You don't need US credit, which is the biggest myth out there in the world, besides Santa Claus is still real, is that you need US credit to own a home, which you don't, or to get a mortgage, which you don't. You never did. But now we've made it even more simple by saying, listen, we don't even need to see your personal income or your pay stubs. We don't need to speak to your human resources manager to give us 12 months of pay stubs. We just say, hey, listen, if this place you're going to buy is renting for $3,000 and the mortgage that you get through us is $2,000, I don't really need to see anything because the rent's going to cover the mortgage. So that's really, really exciting. And if you want more details, message us and I can go into that with significantly more detail. How fast can a bridging loan be approved and funded? Good question. So generally in most countries, it's pretty fast. It's anywhere between 1 to 4 weeks. Different lenders can operate at different speeds, but generally speaking, it's also, do you have an existing mortgage or do you want to do a second lien? Whatever it is, this is a really exciting product that we've brought to the market, and it's in super high demand right now because banks all over the world, they're not lending. Right? They're putting their money elsewhere as opposed to lending, so lending for property investors isn't on their priority list right now. But for us, this is all we do for foreign nationals. We lend for people living in Canada, Latin America, all of Asia. And a lot of that has to do with they want to send their kids to some of the best schools in the world. What are some of the more unexpected ways clients are using bridging loans? Well, generally, it's usually they need money quickly. So whatever that means, they need to make an investment. Sometimes it's, unfortunately, sometimes it's healthcare related. My mother has got sick and I'm not covered by, there's certain things that I need X amount of money quickly to pay for certain health bills. But there's a whole range of reasons you use a bridging loan. Actually, before I continue to ask questions, I wanted to say in the chat in the chat box, you'd be doing me a huge favor if you could start following us on our various Instagram account. My co-founder Robert posts things on TikTok. These are quick snippets on real estate tips and tricks and anything US related. It's on TikTok. We've got a very robust YouTube channel where we interview specialists in real estate, or sometimes it's just Robert and I talking about opportunities in the US. But take a look. There's tons of stuff there. I have an Instagram channel called The Global Mortgage Guy where we talk about bridging loan strategies and tips and tricks as well. So please follow us where you can. Also, we have 2 newsletters that goes out. America Mortgages is a US specific newsletter. Global Mortgage Group talks about the markets and different investment opportunities and ways to look at. It tends to look at the world and then tries to see what's happening in the world and with the outcome of how it affects real estate prices where you live. So please follow us on that. And all the details are on the chat. How do migration trends affect real estate investment opportunities? Well, I think, I hope part of this presentation explain that is that, you want to buy where you expect, people to move to. When I was living in Hong Kong, when I first moved to Hong Kong in 1995, Wan Chai, you would have never thought to buy property there, or Sheung Wan. But as Central only has so much space and mid-levels, that slowly it gentrifies into these areas. And you see that in big cities. Brooklyn 20, 30 years ago was not considered someplace where you want to live, and now it's super gentrified. So you could feel it in a city by city basis, but so that's just a microcosm of an entire country. So people move from California, they'll move to Arizona or Vegas because it's kind of nearby. Nevada's seen huge gentrification. So, you have to do a little bit of homework, call us, we can help you through the thought process. But yeah, it's a great opportunity to kind of start looking at your investment opportunities, because I can guarantee you, especially what's happening right now, the Fed, I think, is going to be forced to cut rates. They've got a lot of things they have to manage. They've got to lower the debt burden on the rollover. So hopefully they roll it over at a lower rate. And this is all, and once that happens, we're off to the races again. So start doing your homework now. Call us, call me, call your American Mortgages representative. We can walk you through the process. We can introduce you to a realtor. We can crunch the numbers for you. Whatever you need, we're here to help. Aside from income coverage, what loan to values can foreigners get on a mortgage for a rental investment? So I think I forgot, I may have overlooked this key point. As a foreigner, that's a non-US citizen, you can borrow through us up to 75% of the home value. Now think about that. You see $1 million home, we'll lend you $750,000 without any US credit, without any social security number. We'll look at the rental income, or we have programs that will look at your local income. And we don't care what you've done in Singapore or Frankfurt. You've got 100 homes. We're not going to ask for that. We just want to see what you make in that country. But our most popular loan is based on the rental income. And can you imagine that? 75% leverage as a foreign national. If you're a US expat, that's even higher for obvious reasons. All right. How are the questions coming along? Matthew, you have any questions for me? One just came in. What do you think? How many times do you expect the Fed to cut rates this year? Well, it's anybody's guess, but however, how economists look at it and how market participants look at it is they look at the Fed fund futures, and it's pricing in 4 rate cuts this year. So think about that. It's almost May, right? So you have 7 months and 4 rate cuts. If property prices can go up 10% in a world where rates went up from 0.25 to 4 Fed funds rate, what do you think home prices are going to do when they go from 4.5 to 3.5? I mean, it doesn't take to be, it's not a rocket science. You don't have to be a rocket scientist to figure out that's going to be really good for home prices, partly because people are waiting for this, are going to buy, because they know people in the US with disposable income know what I'm telling you. It's a tenant market, so they want to accumulate single family homes that they can rent out to earn rental yield while the property prices are going up. Does Global Mortgage Group lend to international investors financing property in the Middle East? Our parent company, Global Mortgage Group, is an international real estate financing broker. We have a team in Dubai that facilitates international investors looking to buy property. We have a team that can select, amazing condos, in Dubai, as well as offer financing. Are there restrictions to apply for a mortgage? None. I mean, there are sanctioned countries, but generally speaking, the US is the land of the free. There's no stamp duty. Foreigners can buy. In fact, let me give you a statistic. Over the past 10 years, foreigners have bought over $1 trillion worth of US residential real estate. A lot of that comes from India, China, Latin America, London, Canada, and Southeast Asia. Last year was 50 billion, right? So there's it's always a destination for foreigners to buy property there. A lot of that has to do with education. But the lack of information, which we're hoping to improve on by having these webinars, educating the populace on these opportunities, because it's not, you have to kind of be in the know to kind of look for this information. Sorry, might have missed this answer. How do you think interest rates will change going forward? So the Fed funds rates and the 10-year Treasury rate, they tend to move together, but not necessarily. They're based on a few different things. But it's pretty commonly accepted that Fed funds rates are going to be cut this year. And the market is predicting 4 times. So just to put things in perspective, it's now almost May. So you've got 8 months, did I do my math right? 8 months, 4 rate cuts. So like I said in slide 2 of the presentation, is that in 2022, rates went from 0.25 to 4 and went up a little more after that. But in that period, property prices went up 10%, not down. So imagine what will happen to property prices when rates go down. Like rationally, you would think home prices might go up more than 10%, right? So we're all really, really excited for that. We have our loan officers around the world are working day and night because investors around the world sees this. They've taken out the emotional aspect to this. They're like, listen, these tariffs and, all this noise in the media, it's not good. But if I look at things objectively, what's changed? Nothing's changed. There's lack of supply of homes. People are gentrifying to states where there's employment opportunities. CHIPS Act and Stargate are hiring because they're building AI databases and data centers and things like that. And now you're probably moving more manufacturing in because they want to start making more stuff in the US. And two, the thing that has changed has actually helped the thesis of investing in US real estate is because tariffs are going to make input costs more expensive. And what are home builders going to do? Are they going to build and try to pass it on? No, I think they're not going to build. I think they're going to pause because you don't want to, if you're a company, you don't want to increase CapEx in an uncertain environment. And so what that makes is the supply landscape is actually static, but the demand landscape is increasing. So think about that. So it's and with mortgage rates so high, it's squeezing out the average of the marginal buyer for their primary home. But for people like you and I and everybody on this call and Blackstone, they know it's a good time to buy because rates are only going to come down. So if you can buy a single family home or a condo and you're maybe making $200 a month, not that great, but it's positive, right? 200 times 12, maybe the home price is, $200,000 and you've made $1,200. Well, actually, that's pretty good yield. But what's going to happen in 3 years? Well, one, your average rent will increase 5% at least a year. So that 1,200 a year could be 1,500 a year, right? And then your home price will increase 5% a year as well. And more importantly, mortgage rates are going to be cut. So you have a margin expansion story as a property investor. And that really is the US real estate investing game. How does pre-approval for a US mortgage work? Do you need an offer on a property to qualify for the mortgage, or can one qualify ahead of finding the property? Really good question. So in the US, you need a pre-approval letter to buy a home because as a seller, just one more thing, just in terms of the current environment, another aspect to buying property right now, which works in your favor, is that if somebody is actually selling their property now and they're not doing a 1031 exchange, which means they can buy another property at a higher price, that means they're going to eat the capital gains tax, which means that they're probably a motivated seller and you as a buyer have negotiating power, right? So that's really important. Somebody that's selling now probably needs the money, right? So I digress a little bit. So we are able to issue a pre-approval letter within 24 hours. You use that pre-approval letter as proof of financing when you go to go house shopping in the US. So the sequence of events are: one, we give you some advice on, how to begin the process. Many of our clients like to set up a LLC and apply for a bank account because a LLC holding rental properties is very tax efficient, but it's 50-50. You can hold it in your own name. Then you come to us. We walk through the loan options. You ask us where we think is the best place to buy. We give you some recommendations, and then we connect you to a realtor in that city. So we've just launched this portal, this in-house portal that connects our buyers to realtors in the cities where you're looking to buy. It's fantastic. We just launched it. If you want more details on how this works and how you could use it to help you with your US real estate purchase, let us know, email us the contact details. I'll just give you the contact details you should have in the email invites that went out. But yeah, so we can issue a pre-approval. Once you find a home and that you like, you go into contract, which means you've paid earnest money or known as deposit, and you're good to go. You call our team and you say, hey, I saw you on the webinar, you issued me a pre-approval, I'm ready to go. Once that happens, we update a few of your personal information. You submit it to our underwriting team, and then we give you a formal approval with a set of conditions to fulfill. And a lot of those we do for you. We have a portal, which is super cool. It's super encrypted. It's state of the art. It allows you to upload all your relevant personal information on this portal and it connects to our loan officers. And we have a team in the Philippines that actually does a lot of this for you. We order title, we'll help you ordering insurance. We have a foreign exchange partner that helps you getting the best rates to wire money to make the down payment. So all of this stuff we do for you, but it's another way of saying that we're one-stop shop. We're here on this evangelical crusade to teach the world that US real estate investing is not only achievable and attainable, it's really the best investment decision you can make at the moment. Oh, I see different places to ask questions. All right. Oh, here we go. With the talks of Fed cuts later this year, should we wait or lock in financing now? You know, okay, so there are two variables, right? There's rate and there's price, right? Now I can tell you that, oh, there's fireworks. I can tell you that if you put in a spreadsheet what your costs are, if you're looking at a property now and it's $200,000 and you're waiting for rates to cut, I can guarantee you as soon as rates are cut 50 bips, that'll be $250,000 literally overnight, right? So it's better to lock in now because your cash flow calculation is significantly more sensitive to the capital value than the rate. So you can do the math, we can help you with this, but lock in the rate now because you won't be able to buy the homes at this price because of the lack of supply, right? There's abundant supply, you can wait and you can kind of pick the house as you want, but in a bull market, once rates are cut, these things are going to shoot up really quick. Do you work? Whoa, questions are coming in hot and heavy. Do you work with self-employed clients who do not have traditional salary documentation? 100%, right? And this is the trend now. The world is moving farther away from traditional income. Traditional income is what a bank wants to lend you. They want to see you working at a job for 5 years and stable income and pay slips. But people have different income sources. They're trading, they're digital nomads, they're doing different things on TikTok or Amazon. But this is what we excel in, right? We understand that this is a large portion of our investor base are people who are self-employed. And so this is where the rental coverage program that I talked about earlier comes into play. We don't really need to know about your personal income or employment situation. If the rent that we appraise the home comes in, and if it's more than the mortgage, you qualify. And in the rare situation that it doesn't, we just lower the loan to value, so you do qualify. It's a super easy to qualify mortgage program, and we are pioneers of this for offering it to foreign nationals and people outside the US. In fact, we are the only US direct lender with offices outside the US. Our theory was, why don't we put financing close to the borrower? Like in other countries, financing is close to the asset. We make that close to the borrower. So you get to speak to somebody in your time zone. We try hard to get somebody in your language, and we're slowly adding people all over the world. So we have loan officer teams in pretty much every time zone, in every continent for sure, that speak your language, and we answer questions 24 hours a day, 7 days a week. We're like the 7-Eleven of US mortgage lenders. What should someone do today if they want to take advantage of these trends but don't know where to start? Well, I would suggest, I'm more than happy to kind of walk you through this, give you some of the screens. At the end of the day, there's got to be a leap of faith. You got to make that, it's like, you haven't gone to the gym in 10 years. You still got to make that leap of faith. Now we will give you as much information as we have, walk you through the process, introduce you to our accountant, US tax accountant partners, people who set up LLCs if you want one, talk through the mortgage, introduce you to the realtor, run the numbers for you, calculate cap rates, net operating income, whatever it is, we can help you with that. But you need to take the first move. Contact us, get the ball rolling. We will share our experience, expertise, and knowledge with you because we want you to be successful. We want you to make money on real estate investing because we think it really is the best opportunity at the moment. Wow, managed to answer all the questions. All right. Well, this was super exciting. I'm going to wrap it up here. Listen, my email is donald@gmg.asia. Pretty easy to remember. Please email me. I have tons of slides. Our research team has pretty much anything you can think of. We've probably done some research on it. We'll walk you through the process. I'll introduce you to one of a loan officer in your time zone that could speak your language to get the ball rolling, to show you what loan options there are. But you have to make the first move, but we're here to help you, guide you, teach you, educate you, and create a more successful US real estate investor in you. So I've said enough. It is 6 p.m. I'm actually speaking at another event in 30 minutes. So thank you for joining. I appreciate everybody's time. If you have any questions, please feel free to contact me directly. Good luck, happy hunting, and all the best for the rest of this year. Bye-bye.